You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, what has panned out to be an extremely volatile trading session through the day. Remember, it was the day when the markets were constantly keeping an eye out on what the RBI governor will talk about as far as the monetary policy decisions are concerned for the first monetary policy review of the fiscal year 2025. While it's been a status quo and on expected lines, there could be a delay long way when we could be seeing higher for longer interest rates coming in, and inflation continues to be under keen watch list as far as the RBI is concerned. The markets did give initial thumbs up. We did see some recovery happening, and now the markets have again slipped as far as the Nifty is concerned below the 22,500 mark. 17 points lower in trade, but it's the Nifty bank that's still holding on to some gains. 0.5% of a move can be seen on this one. 48,329. It's this index that actually got to a recovery after the RBI's monetary policy. And then you can actually see some of the stocks that are actually doing well as far as the Nifty is concerned. So Kotak Mahindra Bank has now taken the top spot on the Nifty movers. It's now up almost 2%, along with HDFC Bank that is in an uptrend for the second day in a row as well. Apart from this, it's Bajaj Finserv that is taking some limelight, 1.2% higher in trade. Life insurance companies have been definitely in momentum right from the morning trade today. So SBI Life, HDFC Life, ICICI Pru and ICICI Lombard, those are the kind of stocks that have been buzzing in trade as well. Sectorally speaking, the sectors that are still holding up: Realty space, of course, that's got some other additional fillip as far as the RBI policy is concerned. 1.5% uptick for this one. Small caps are doing well. 0.7% of an increase can be seen on this one. FMCG, financial services, private banks, PSU banks, metals, consumer durables, the sectors that are still holding up into the green. Let's now welcome our guest on the show. Mr. G. Chokalingam joins in. He's the founder and the MD at Economics and Research. Mr. Chokalingam, good afternoon. Welcome to Business Today TV. It's a pleasure to host you always. Do tell us, has anything changed for the markets and market participants after the RBI policy, the way it has come out with the statements on growth, on inflation front? Where exactly do you see the markets will be looking ahead as far as these comments are concerned?
Yeah, there are two aspects. One is about RBI and then the market outlook. It's expected that RBI would not touch the interest rate because the real interest rate is still, quite low already. If you have around 4.5% inflation, 6.5% benchmark interest rate, the real interest rate is only around 2%, which is much lower than what we see in the US, where the real interest rate is higher than what we are facing in India. And also, second, there are chances that inflation might once again edge up. Because the water storage is quite pathetic in southern part of the country, and we already had a marginal failure of monsoon last year, and oil price now again shot up 18 to 20% from 4 months bottom. So RBI would wait for further a lot of comfort on inflationary front before cutting down the interest rate. So I do not expect any significant cut to happen at least for next 3 to 4 5 months. And therefore, the market also did not react in either way in a significant manner because there is no expectation. As far as the market is concerned, as I mentioned on the same channel some time ago, I am quite confident that the market will hit $5 trillion market cap. It is at a striking distance. After the recent recovery, we are just around 3.5–4% away from $5 trillion market cap. And also, we are now 398 lakh crore. So probably next week or this month itself, we will create a two new record. One, 400 lakh crore of market cap that will be breached. And second, most probably before people go for voting, we should hit $5 trillion market. And both are possible perhaps in April itself. Based on the fundamentals, a lot of money is coming. We saw mutual fund money is pouring, and every week, even now, 6 to 8 lakh new investors are coming into the market. Except on the monsoon or the little concern on inflation, things are too good. Every institution in the world is raising the GDP growth upward. So considering all that and also the expected political stability, I am very bullish in the short term, and we should be able to celebrate 5 trillion market cap, $5 trillion market cap this month itself.
Wow, $5 trillion market cap this month itself. That's a big bullish view coming in as far as the markets are concerned. You know, we're also heading into the earnings season now. What are your key expectations from Q4 and any particular sectors where you believe the outperformance or the underperformance could be seen this time? Where would you be keeping a keen eye on?
Certainly, two sectors would come on the top of the league table. One is the banking sector, because throughout FY24, the credit growth has been in a strong double digit, and quality of asset has improved a lot. So these two will push the the profit growth. It will be in strong double digit for the banking, including PSU banks. That will be followed by automobile sector, except the commercial vehicle players and you know tractor players. All other segments of automobiles companies should do very well. These two would lead the table. And as far as on the underperformance is concerned, it's not a surprise. IT sector will underperform in terms of the earning estimates, actual performance of the earnings, and that would be followed by some of these FMCG companies. The rural has slowed down, and there has been some input cost pressure. So these are the four sectors, in two directions should drive the earnings.
Okay, as far as some of the sectors are concerned, let me come down to some specific stocks and now ask you, sir. You did say that banking is something that you'll be keeping a keen eye out on. We've seen a smart bounce in the HDFC bank counter, especially after the Q4 business updates that we have seen. Where do you see HDFC Bank headed now, and is this, finally a turnaround time because of the wide underperformance seen on the stock over the last 3 years? Are things going to change?
No, I am extremely bullish on HDFC Bank, though I do not own it personally. Ever since it started falling badly, I have been reiterating my high conviction. For one major reason that, there is a lot of synergy due to the merger. And more than that, what I like most from HDFC Bank is that 53% of the branches are now in urban and semi-urban. Through digitalization and through ATM, they are able to cover larger areas of urban and rural areas in the country. And that is where the next level of growth is there. Because if you take any city, whether it is Chennai, Mumbai, Calcutta, Delhi, or any other tier 2 cities, the urban sectors are crowded with the bank branches. None of us go to branch, maybe once in a quarter we may visit. Otherwise, we don't go to branch. And wherever we have our own bank branch, you will see other 5 to 10 other banks having branches there itself. So it is extremely crowded, penetrated. Opportunities are not that great in the urban sector, but it is great in the rural and semi-urban. And that is where HDFC Bank is focusing on. So therefore, I am extremely bullish, also considering its quality of assets and CASA deposit ratio. And most importantly, the banking sector has come up in a very big way in terms of growth and quality of asset, but HDFC Bank lost its valuation multiple on the markets. It used to trade even at 5 times price to adjusted book value. Now it is roughly around 2.5 times. I think it's a great opportunity for investors to buy. This will be the most dependable Sensex and Nifty stock for investors.
Wow, okay, so that's as far as the stock is concerned. Vijay, I also wanted to ask you, apart from HDFC, there's several other also private sector banks, large banks that have come out with the Q4 business update. Even the small finance banks, NBFC companies, they've come out with strong data numbers here as well, and that's right ahead of the earnings. PSU banks, of course, they've been constantly moving in a league of their own. How would you advise a fresh investor looking to deploy fresh money in each of these components? What is the best way to approach these three?
Yeah, definitely. It's a very interesting question. And I have been, tracking this banking sector from 92. I've been extremely bullish on PSU banks every time when they get hammered. If you look at last 30 years, the PSU banks in bad market, they go down to 0.5 times adjusted book value. That is 50% discount to adjusted book value. And in a bull market, they come back to 1 time, 1.5 time. Now, most of the banks are trading at even 2 times. So I think now some caution is needed. The size itself will be a problem. A base effect will start creating problem for growth. So fairly priced, unless somebody has a 3-5 year view, I would suggest that is not the space to go aggressive to invest. So apart from HDFC Bank, one can look at old private sector banks. I always look at the beaten down stocks. Apart from picking up one or two in a large cap, I look for possible wealth creation, and that way I recently come out with a report on Karnataka Bank. Now, if you look at a Karnataka Bank, its adjusted book value is 270 rupees. Now the stock is available at 238 rupees. It's a adjusted book value. And this has survived in the market for more than 100 years successfully. It has survived, wars, COVID, everything, nationalization, everything survived. And the last 3 years of progress has been tremendous in terms of business size growth, in terms of quality of assets. Earlier, 5, 6 years back, if it makes a pre-provisioning profit or operating profit, almost 50, 60% will go for write-off provisions. Today, that has come down to hardly 25, 30%. So whatever the profit accrues on because of growth, large percentage of that will go as a net profit rather than for provisions, because the net NP has come down a lot in the last 3, 4 years. So this is the one bank I believe can be a wealth creator. Personally, also we have invested in Karnataka Bank, and therefore investors should consider that before taking my word for with confidence.
Okay, understood that. Now, apart from this, when we talk about some of the momentum spaces, real estate probably has been in momentum. It was the top performing index in 2023. Even in FY24, it came out to be the top performing index with 141% kind of return. And even now, the momentum is strong. The pre-sales data coming in is strong. There is a lot of activity really happening. The builders and these companies are constantly on the lookout on acquisition of lands, of launching residential and commercial properties. What is really your sense as far as the real estate space is concerned? Will this turn out to be a wealth creator for the second financial year in a row?
Difficult to create a wealth creator. Maybe modest return is still possible, 10, 15% in select stocks, because yes, the rally was backed by the fundamentals. Last 2 years, we have seen the real estate asset prices going up minimum 20%. In these. So many of these real estate companies, what was a problem became a benefit. Last 7, 8 years, some of these companies were holding on to a lot of inventories. So that was a problem in terms of working capital space and not able to deleverage and sitting on a lot of debt. Now that has become a blessing because sudden jump in the real estate prices. So all those companies which were sitting on the developed properties or land bank, now they are reaping the benefit. So market has already rewarded. So now, if at all somebody wants to have another 2, 3 years view, then one may look at stock like Realty and the DLF. But otherwise, one should not go too aggressive in the real estate pack.
Okay. Also, sir, I'm pretty tempted to ask you, apart from the themes and specific stocks that I will come to you, these days a lot of buzz is happening around social media with the kind of political nominations going through in Lok Sabha. There are, stock holdings and mutual fund investments of top political leaders getting, known to all of the viewers out there. Especially, we were looking at the number of stocks that Rahul Gandhi holds in his investment portfolio. Similarly, some of the stocks that were coming in as far as Arun Koval is concerned, Nakul Nath is concerned, a lot of these political leaders. Have you had a chance to look at any of their stock holdings? Maybe would you want to comment on that what should an average viewer really understand in terms of the kind of investments that our political leaders are making in the stock markets?
I have not looked at the individual stock, but one thing I can tell you that I have spent a lot of time in wealth management companies. Most of such HNIs always have the wealth advisors. So I am sure based on the wealth advisors they would have bought stocks. So, but otherwise I have not looked at individually.
Okay, you have not looked at individually. Well, you must in your leisure time, and we have also done several shows on that as well to really let people know as to how are the political leaders investing and whether they are on the top of their game when it comes to investing in stock markets too. But we'll come to that later. A lot of other stocks that are buzzing in trade, so let me just come down to those now. In the F&O space, SBI Cards is the one that's really surging higher in trade, 5% higher. Granules is moving up. Metropolis Healthcare has been in the top spot right from the morning trade. Then you have Indraprastha Gas, Tata Chemicals, Marico, some of these stocks that are buzzing afresh, in the F&O action as well. I want to ask you, Mr. Chokalingam, would you have a view on Tata Chemicals, for example? Chemical space has been again coming back to the fore. That has been a big underperformer for a long slot, but is this a space that one should incrementally put in fresh money?
No, in fact, last 1 month we have been analyzing chemical stocks.
Yeah.
Able to get confidence in any of them, because when you look at the product prices, 90% of the chemical companies are still going through tough time in terms of lower price realization. Very interestingly, the chemical business has to do with the European economy. Historically, if you look at last few decades, even in India, the chemical business is highly linked to the performance of European economy. So therefore, as of now, the indicators are not favorable for the realization of most of the chemicals. Like if you look at caustic soda, it is, a lot of companies have posted losses or posted a 90% year-on-year fall in the profit. And that is again, caustic soda prices are highly correlated with the soda ash prices, which, Tata Chemical may be involved. So I would not suggest, better to wait for December result and then take a call. But otherwise, among the stocks you have mentioned, one can, look at the SBI card. I think if my memory is right, SBI card is still trading at below its IPO price. Unfortunately, despite a strong growth and a good potential, the stock has corrected a lot. So that is one stock one can definitely look at.
Okay, fair enough. SBI cards can be looked at. Let me now welcome our other guest also on the show. Mr. Chokalingam, do stay on with us. We will continue the discussion with both of you. So, Swati Hotkar now joins in. She's the AVP Technical Research at Nirmal Bang. Swati, good afternoon. Welcome to the show. Do tell us, where exactly are you looking for in the markets for value, and any particular stocks that you can share with our viewers? Swati, could you unmute yourself? Are you on mute by any chance?
Yes.
Yeah.
First of all, good afternoon, Sakshi, and good afternoon to all the panelists. That's it. The overall view on the Nifty is definitely positive, because from the last few trading sessions, we are witnessing that the Nifty is taking a very strong support of 22,300 levels, and from there onwards, we are witnessing a pullback rally. Also, the interesting fact that on high side, as of now, 22,600 is acting as a crucial resistance level. Any move above that level, we expect that this rally is likely to be extended towards 22,800 to 23,000 very soon, because Bank Nifty is really also doing very well. If you look towards the technical setup on this particular indices, the view is coming positive, and the bank indices has given the breakout of a cup and handle formations, and I believe this rally is likely to be extended towards to 49,000 to 49,500 levels. So the view will remain a positive as long as Bank Nifty also sustains above 47,500. Now coming towards the stock specific, yes, on a mid cap counter, Capacite really looks very good on the technical front. The stock has given the breakout of a US head and shoulder pattern formations breakout with the decent volume. Yesterday only the stock has given the breakout of a 280 levels. Today it's sustaining above that level. I believe that this momentum rally is likely to be continued towards to at least 320 to 340 level. So one can take a long position at the current market price by maintaining a strict stop loss of a 270 on a downside.
Okay, got that. We will keep an eye out on these stocks. Some of the other PSU stocks are also buzzing in trade. Mr. Chokalingam, if you could keep an eye out on those and tell us what is your long-term view on these stocks. NBCC, again, after consolidating a bit, it's back in action today. About 9%, 9.5% surge can be seen on this one. And towards the latter half only, we have actually seen volumes also coming back onto this stock. Apart from this, IRETA, of course, the fresh trigger is that the circuit filter has been revised to 20%, and therefore we've actually seen a 12% kind of a move on this one too in trade today. But the stock has been in momentum for the last 1 week or so. Anything from such buzzing PSU stocks that you like, sir?
No, certainly not, because most of these stocks have a very low retail float. That could be the reason for a flare-up. Valuation comfort is not there, definitely. Therefore, I would not touch these two stocks.
Okay, within the PSU basket, sir, where exactly are you still looking for some value? Is it defense, railways, or any other sector that you still believe that some of the stocks can be eyed?
Unfortunately, a couple of stocks I bought, so for 30 days I cannot share as per
Okay.
the file
Okay.
count.
Recording in progress.
Fair enough. The other space that I wanted to discuss is the entire oil and gas basket in the midst of crude oil prices now surging. How would you really approach the upstream and the downstream companies which have already had a good phase and good re-rating take place, sir?
See, there is a fear of inflation once again flaring up. That is why government is taking right decision on wheat and as well as on sugar front. Similar move can happen on oil in the sense, I remember about 10-15 years back when similar thing happened, the budget increase cess on oil by 80% in one shot. Because, the diesel and petrol prices have been revised upward quite significantly, in the last few years. Now the time has come, we cannot punish the public. So therefore, when oil prices already up 20% within 4 months, and there is a chance that oil price might even hit triple digit. So in my strong, firm view is that the corporate are going to become victims of rise in the oil prices in terms of, increasing the cess on the oil. And therefore, the government would be in a position to benefit the public consumers. So that since all these stocks are also rise and multifold, I would suggest at best one may hold on, but I would not suggest buying now.
Fair enough. Swati, let me come to you with some of the buzzing names and maybe you can suggest to us what exactly are you seeing on the charts for these stocks. NBCC, let me take that one first with you. Strong momentum, would you chase it?
Yes, actually, definitely. The view is positive on the technical front. If we look towards a longer degree horizon, monthly chart, the stock has given almost on the verge of giving the breakout of a flat pattern. And I believe that this stock is likely to continue its rally minimum towards to all-time high, which comes to nearby 176 level. So currently, those who are looking for a fresh buying position also can take a long position at the CMP or any dips coming towards to 120 or 115 levels. One can take a add-on positions. I believe downside it has a very crucial support levels of 110 levels, and upside I'm quoting for a short term target of 175 to 180 levels.
Okay, let's also talk about Zomato then. The stock is now trading above 190 levels. The stock is up 2% in trade today, has been on a constant uptrend. Last 1 month of move will tell you the stock has already moved 15% odd. Last 6 months the stock has moved up 80% odd or so. So there has been constant momentum building up and things are looking up, and now we'll be looking for the next quarterly earnings from this one, Swati. Technically, where do you see? Do you see 200 rupees approaching fast for Zomato?
Yes, actually, very soon, hardly 10 rupees is away from 200 levels. Currently, the counter is trading at above 119 levels, whereas the support is placed at 175. The stock is also forming a flat pattern on the daily charts. On the technical spot, definitely the stock is doing very well. Fresh long positions are not recommended because already the counter is chasing a new all-time highs. So risk reward ratio is currently a little bit unfavorable. But those who are looking for those who are already holding the long positions, they can definitely hold on by maintaining a trailing stop loss of a 175. I'm looking for a target of more than 200, say 220 will be the next level we can see into the Zomato.
Okay. Mr. Jokalingam, your view on Zomato or any other new age tech stocks where you'll be keeping a keen eye on the earnings this time?
I must admit that in the last 18 months, I have gone miserably wrong in Zomato. So once again, I may go miserably wrong, but at this price, I do not have a comfort at all in buying.
Okay. And any other new age tech stock that you'll be watching out for now?
See, I have a bias. I may be wrong. I do not recommend the e-commerce companies, but certainly, though the IT sector is likely to grow only in 2 to 3% in dollar term, I believe there is a possibility of further consolidation happening in the small and mid-sized IT stocks. In fact, last 10 years I've been promoting this theme, and many of these ideas are played out well. So now the two stocks which I am recommending in the small IT theme are Mindtech.
Okay.
Mindtech. It's a small MNC IT stock. I like this stock a lot. It is suitable only for highly risk-taking small retail investors because it's a small cap or micro cap. Liquidity is a concern, but it is an MNC stock sitting on a net cash of 94 crore on the books. The second one is Explio Solutions. This is again MNC IT stocks. So one common thing I picked up these two stocks, both are close to 52-week low rather than at a 50-week peak. and both are MNC stocks. Both have got a very strong balance sheet and net cash. Now, in case of Explio, the management has merged recently four of the parent companies in India with a listed company. So they have consolidated the business. So that gives me a lot of guesswork whether any further consolidation is possible. So I like these two stocks, Explio and Mindtech. For risk-taking people, I feel these two stocks can create a very good alpha. And though the risk is there in terms of liquidity, fundamentally I found them very attractive.
Okay, Mind Tech and Explio Solutions. You can actually trust Mr. Chokalingam to come out and talk about some of the stocks which we rarely talk about, and he really digs deep to really find value. So we'll keep an eye out on these stocks till the time we get him next on the show. Of course, we do know that Indoco Remedies is something that he had suggested to all our viewers, and that stock is in momentum again today. Mr. Chokalingam, what next for Indoco? Is this level also something that you can advise fresh investment in?
Certainly, yes. In fact, today it went to 372, came down to 350. So this correction, I like it because one can build a position for very long term. It's a great attractive price. As I mentioned earlier also, at current price, the domestic formulation business is valued only around 3.5 times. And, some of these domestic formulation businesses are valued at even 7 to 8 times enterprise value to sales. So it may not command, 6 to 8 times like JB Chemical or Aris Pharma. But in my personal view, it definitely deserves 4.5, 5 times EV to sales. And also, its subsidiary has launched the API production a couple of weeks ago. That also would add to the top line and bottom line. So I firmly believe that somewhere around 430 could be the very conservative target price for Indoco Remedies.
Okay, fair enough. Swati, let me come to you. What have you looked at in the interim? Any particular interesting stocks that you found that you want to share with our viewers?
Yes, Sakshi, Sudarshan Chemical really looks very good on the technical front as such. If we look towards the monthly, say, chart, the stock has given the formation of a W-shaped pattern and given the breakout of the same levels. Also, the interesting fact that it is well placed above all the important moving averages. Few days back, we have seen that the stock has given the breakout of the 630 and non-stop is just moving ahead on the upper directions. I believe, yes, the particular counter is likely to continue this pullback rally towards at least minimum target of 700 to 740 levels on the high side. So one can take a long position at the current market price also, or any dips towards to 650, 630 levels can be seen of very good buying levels. Whereas the support is placed at 610. Upside target, I'm looking for at least 720 to 740 levels on the high side.
Okay, we will keep an eye out on these particular stocks as well. You know what's more interesting is that the FMCG players are also finding some space for themselves after a long haul of consolidation. Stocks like ITC, stocks like Nestle, Britannia, they are inching up higher in trade. Marico is buzzing in trade right now in the F&O space, about 4% higher. Mr. Chokalingam, is FMCG a space that you will be now watching out for? Of course, the commentary on the monsoons is something that we will continue to watch out for. The RBI governor did talk about rural demand also recovering now finally, and of course the eyes will be on normal monsoons going forward. But how do you see FMCG players really pulling up?
Definitely, there will be little more pain from December results because the southwest monsoon was marginally failure. Northeast monsoon also not great, and the crop area under northeast monsoon also there was no any significant growth year-on-year basis. And now water storage also pathetically low. In fact, today the release says that in southern India, the water storage is only 20% of the capacity. So definitely, already we have seen the rural demand slow down. So there are chances of rural demand remaining subdued, which should affect the FMCG. Now the rise in the oil price also will affect some of the players within the FMCG pack, those who use oil derivative as input. So going is not good in the short term. Result will not be great, but still I would suggest one should look at ITC. We have a buy recommendation ITC. Because as all of us know, the cigarette business will be promising in terms of delivering the profits, and shareholders will get the water stock, and ultimately the restructuring demerger is possible even in case of IT business of ITC, and therefore I would give strong recommendation within FMCG pack on ITC, followed by Nestle. Relatively, its dependence on rural is limited, more of urban centric. So that is another stock which can do well.
Okay, let's look at the Nifty Bank again. So it's climbed up above 48,500 now. Remember, 48,636 is the lifetime high. We've seen the benchmark Nifty climb to a lifetime high. It was only the Nifty Bank that was lacking behind, and right now it's climbed to the day's high level as well. Of course, on the back of heavyweight private banks like HDFC, ICICI, Kotak Mahindra Bank. These are the ones that are actually pulling up the index higher in trade. IndusInd Bank has also moved up in trade. From the PSU banks, it's SBI that's pulling up again. So whole host of banking, finance names, even Bajaj Finserv, Bajaj Finance kind of names, they're pulling up the index higher in trade. So Swati, let me come to you. Where do you see the Nifty Bank headed now?
See, Sakshi, first on the beginning of the show itself, I have quoted a target of first target will be 49,000 levels, and it's on the verge of reaching that levels very soon. Above that levels, yes, door gets open for the 49,500 to 49,000 to 600 levels. So definitely view is positive. Downside, it has been from last 2 days, we have observed that the 48,000 is acting as a very psychological support levels. So as long as it sustains above that level, definitely view will remain positive, and very soon 49,000, 49,600 levels can be seen into the bank.
Okay, understood. Any particular private sector banks that you are keeping an eye out on technically, specifically?
Yeah, technically, I'm looking. My eyes are on the HDFC Bank. This particular stock is really doing very well from the last few trading sessions. In the back month, we can say that the stock has given the breakout of an inverse head and shoulder pattern, and it was consolidating within the range of 1450 to 1460 levels. Up to that 15 points momentum was seen, and the stock has given the breakout of the same with the decent volume. And now looking towards the technical setup, I believe this rally is likely to be extended towards at least 1600 to 1670, which are the resistance provided by the swing support resistance level. So yes, one can definitely look into this particular counter and hold their long positions for immediate target of 1600 to 1650 levels on the high side.
Okay, fair enough. HDFC Bank is where Swati is also keeping an eye out on. So both are guests bullish on the banking space and on HDFC Bank. So there are two votes of confidence really coming in on that one. The mid and the small cap space is also buzzing. So stocks like IRB Infra, Spark, these are the kind of stocks that are actually buzzing in trade when we talk about the mid cap movers. And a whole host of other stocks also buzzing in trade, like Divi's Laboratories. You have NTPC, Tata Steel, M&M, these kind of stocks are buzzing in trade as well. Anything in the mid and the small cap basket, Mr. Chokalingam, that you can highlight for our viewers where you can still look at a fresh buying opportunity?
Yeah, definitely. Another stock in the small cap is, India Telelink, and second, Craftsman.
Okay.
These are the two one can look at. Vindhya Tele is a holding company of Birla Corp, and unlike other holding companies, Vindhya Tele has on standalone basis a great business, which is a telecom EPC project, and this EPC project division has diversified into water projects also. So they have done phenomenally well in the first 9 months, and in the last 5-7 years, the telecom EPC project has multiplied both the revenue and profits, and that kind of trend would continue. And the value of investments in Birla Corp itself is more than its own market cap. Apart from that, it has got a most successful telecom business. So that is one stock one can look at. And Craftsman, which I covered earlier also,
Yeah.
it's a great management, great business model, and the recent stock price correction is an opportunity to build it for medium to long term.
Okay, so Vidya Telelinks and Craftsman Automation from the mid-cap space that you can continue to look at. Swati, what about you from the mid and the small caps? Do you have any stock ideas to share with our viewers?
Yes, Sakshi, I would like to initiate a call on the BEL. This particular counter is well placed about 200-day moving average. From the last 3 trading session, it is just maintaining a very positive closing about the same. Also, the interesting fact that it has given the breakout of a downward, short-term downward sloping trend line. Whenever such kind of a breakout we witness into the technical setups, so we get a very strong momentum on the upside. As of now, the stock is trading nearby its 224, 225 levels. So one can go for a long at the CMP. maintain the stop loss of 215. I'm looking for a target of at least 240 to 260 levels on the high side.
Okay, BEL is on your top radar right now. Let's again look at the markets and see where exactly are we looking at some moves coming in. Again, it's the real estate sector that is the top winner for this week so far. Over 5% kind of gains is what we have seen, and the real estate stocks continue to buzz sharply. Godrej Properties now 4.3% higher. Mahindra Life Spaces, DLF, Macrotech Developers, Oberoi Realty, these are the stocks that are buzzing in trade. We've discussed the private banks and the financial services, but let's discuss what's on the small cap stocks radar right now. So it's IFL Finance has come back strongly. Avas Finances after the Q4 business update. You have NCC, you have Mahanagar Gas, Reddington, Chambal Fertilizers and Chemicals, Apar Industries, Piramal Pharma. These are the kind of stocks that are actually doing well in the small cap space right now. FMCG space, of course, led by the buzz in the ITC stock right now. Apart from this, when we talk about the metal story, that's also been up about 4% for this entire week. So you have Vedanta, Hindustan Copper, Ratnamani Metals, Nalco, Jindal Stainless, Jindal Steel and Power, Hindustan Zinc. These are the kind of stocks that are clearly buzzing in trade. Mr. Chokalingam, what's your view on the metal space and the way the rally has unfolded? Because this is a cyclical space, the large institutions usually stay away from it. What would you really advise the retail investors on how should one assess this move?
Yeah, very interesting. The retail investors should know the fact that most of the time the metal stocks are traded in over single digit, if not single digit, maximum 11, 12. So there is no point in paying 20, 25 P for metal stock, particularly when the metal sector is doing well. And worst case, in the worst bear case, you can pay IP. But when metal business is doing very well, it should give only single digit or maximum 11, 12 P. Now coming to your question specifically, some of the metal prices like aluminum still far below the 5-year peak. But however, in the last 1 month, aluminum prices started improving. And the one stock I like most and where we have a buy report also is Indalco. It is still trading at around 12 PE. And, even yesterday, last 2-3 days also, the aluminum prices have been going up continuously. And there is a lot of expansion plan, a lot of focus on the value addition. So Indalco is a one stock one can safely buy. Since there is some nervousness on the small and mid cap, this would be large cap stock worth considering at the current situation.
Okay, just last 4 minutes to go, so I'll quickly ask Swati also to tell her favorite metal pick as of now. Which one would you go with?
Actually, I would like to go with Vedanta VDL. Why this particular counter I selected? Because if you look towards the last 2-year data from 2022 to almost end of 2023, we have seen a correction was going on from almost 450 to 200 levels. So the stock has retraced almost a very good levels, and there was a double bottoms has been formed at the level of 200 levels. Now, on one other interesting point on the monthly chart, that the stock has given the breakout of a downward sloping trend line, and it has came about at levels which gives a trend of a reversal as such. So I believe that this rally is likely to be seen into this particular counter, and this year will be a good year for this particular stock. Upside for a long-term horizon, I'm looking for a target of again 400 to 450 levels. So those who are looking for a long-term investment, definitely one can chase for this particular counter.
Okay, got that. Swati, time to understand from you, how does one really prepare for the next week? What's in the offing?
See, for the next week, I will go for a banking counter. From the mid cap as such, I will select the IDFC First Bank. This particular counter really looks very good on the technical front. Why so? Because this particular counter is just giving the breakout of a downward sloping trend line, and we have not seen a good recovery or say a very good positive rally whenever the Nifty has been performed or Bank Nifty has been performed. Now the stock has on the verge of the breakout of a 50 days moving average. So risk reward ratio is really favorable in this particular stock, and the small caps are now participating in this particular rally. So at the current levels, 80 at currently the stock is trading at 80.51. Can go for a long position. I'm looking for a target of 85 to 88 levels of the high side. Maintain the strict stop loss of the 77.
Okay, got that. Mr. Chokalingam, last word from you. How do you advise investors to now go forward from here? We are approaching the earnings season next week. So what is the best way to deploy fresh money?
Hold on to your stocks, including small cap, mid cap, till our market cap hits $5 trillion. I'm pretty confident, in the few weeks at least, market is going to be robust and it will be going up. But my only suggestion is that if you are a conservative investor, keep at least 50% of your equity asset allocation in large caps. Top 100, worst case, top 250. Don't compromise on that. The balance 50% only you can put it in small and mid cap. That is for average investors with average risk profile. Extremely conservative, then you can put even 70% in the top 250. Only 30% of the equity allocation in small and mid caps. I don't think suddenly there will be crash because there is a flood of investors into the market. Even last week, more than 6 lakh new investors have come. And long-term story also looks good. So therefore, even if there is a major fall, you can tide over that crisis only by buying a good quality small and mid cap stocks. Because even again correction comes, after that once again there will be a recovery, there will be a lot of wealth creation opportunity. So therefore, freeze on your asset allocation. After done that, ensure that you are not compromising on the management quality, the balance sheet, working capital management, the business model, and valuation comfort. So if you are not compromising on any of these 4-5 parameters, Indian equity market is an amazing place to create wealth for the middle class.
Okay, well, on that note, thank you so much, Mr. Chokalingam, and thank you so much, Swati, for being with us on the show and navigating through the market strategies for all our viewers and helping us with specific stock ideas as well. Truly appreciate your presence. And now the markets have shut shop into the green, and that's a bit positive. 10 points higher after all that volatility. 22,500 by our side. 22,525 is the level at which the Nifty shuts shop. But clearly, the star of the show was Nifty Bank, 48,524. A strong 1% up move. The Nifty Small Cap 100 Index also moved up pretty sharply, 0.8% higher. We did see moves coming in on the real estate space, on the private banks space as well. And the PSU banks also did strong showing towards the end of the show as well. Top stocks: Kotak Mahindra Bank, SBI Life, HDFC Bank, Bajaj Finserv, HDFC Life, ITC, SBI, Shriram Finance. These have been the top movers as far as the Nifty is concerned. On the downside, you did see the laggards being Grasim, Ultratech Cement, L&T, Bharti Airtel, Hindalco, Bajaj Auto, Bajaj Finance and Tech Mahindra as being the non-contributors to the Nifty move in today's trade. In the F&O space, SBI Cards that we discussed was the top mover, followed by Indraprastha Gas, Granules India, Metropolis Healthcare, ICICI Lombard and Godrej Properties were the top movers. And among the sectors that did not do well today or did not participate, IT slipped into the red, 0.5% lower in trade. Healthcare, auto also dragged a bit, but rest of the sectors pulled up smartly in trade today. But definitely it was HDFC Bank that led the show as far as the Nifty Bank is concerned, along with Kotak Mahindra Bank that also came back pretty strongly in trade. So that's as far as the markets are concerned. We'll leave you with that, but do stay on to Business Today television, as we will continue to get you all the views from the world of business and stock markets right after this show as well. So stay tuned.
The domestic economic activity continues to expand at an accelerated pace, supported by fixed investment and improving global environment. The second advanced estimates placed the real GDP growth at 7.6% for 2020.